Get into our stock of the day. It is Brambles reporting 7% sales revenue growth, increasing to $7.4 billion in the first 9 months of the year on its third quarter trading update. Also reporting underlying profit growth between 13 and 15% in constant currency and positive free cash flow before dividends of up to $800 million US. The pallet and logistics company reconfirming its FY24 guidance with sales revenue growth of between 6 and 8% and underlying profit growth of between 13 and 15%. What did the market think of that? Well, in fact, I was going to bring you the chart, but the shares have suffered today on the local market. In fact, they are off close to 5% in today's trade. Rudi, Brambles, what are your thoughts?
Yeah, two observations, and this is in extension of the US as well. Companies that report results tend to get a weaker share price. We've seen the same thing with the likes of Netwealth, Hub24. Market sentiment is quite negative actually, outside of the pricing out of war risks. The market is not very positive on companies come out with results. Even though if you look at those results, there's nothing wrong with them at face value. Clearly the market was hoping for an upgrade in their guidance, which hasn't come through. But as an investor, you just sometimes, if you own it, you just have to take this on the chin and have to realize that investing is about longer term, not in the immediate here and now. If you look at the numbers and you look at the fact that if you take a longer term view, that Brambles has had a period when they were quite struggling and for quite a while, and they're now sort of like making a comeback. And if you believe that comeback has further to run, which I think is what logical to assume, then this could be one of those stocks that you have in your portfolio for the non-spectacular but steady part that gives a little bit of a backbone in your portfolio. And you can also refer to as defensives, basically. Defensives doesn't mean that they don't fall, but it does mean that when times get tough, they sometimes give you that extra oomph in your portfolio, which otherwise you won't have if you only have piddly microcaps in your portfolio, because they do fall. So on that perspective, I think you could at the very least own Brambles, but I think you can buy it today as well. If that particular part of the portfolio needs a little bit of extra additions, allocation. So but I wouldn't think any spectacular things from Brambles. That's not the type of company. But right. Steady as she goes, yes, absolutely.
All right, but at these levels, you'd be prepared to buy it?
Absolutely, yes. And it's, I mean, at the very least, it's 5% cheaper than it was on Friday.
Yep.
Great to buy.
It's all relative, isn't it?
Yeah.
Okay, Ben, Brambles.
Yeah, I mean, in the short term, trading update looks like they're a risk to miss the top of guidance, according to the broking community at least. In the long term, yeah, I mean, it's a defensive, it's a boring business. Pallets, crates, containers, their end markets, are they going to grow it faster than GDP? I would expect probably not. And in terms of the longer term picture, earnings have kind of gone nowhere since it listed 20 years ago. It's paid some dividends along the way, of course. But, you know, EBIT has only increased at 2.6% CAGR over 10 years. So look, we think there's probably better opportunities. If you're a yield investor, it only yields 3.5%, partially franked. So look, I don't see too many reasons to own Brambles at the moment.
Would you hold it though?
I would say it's a sell, just based on other opportunities.
Fantastic. Well, there we go. We've got a market right there for Brambles. Rudi's buying, Ben is selling.